Good morning, everyone. My name is Rochelle Sparko, and I'm the Director of North Carolina Policy at the Center for Responsible Lending. Thank you for joining us this morning as we discuss the student debt crisis in North Carolina. Today, the Center for Responsible Lending will be sharing the results of a poll of North Carolina student loan borrowers, as well as announcing, along with the North Carolina Coalition for Responsible Lending, the start of a campaign to reform student loan debt in the state. I'm going to go over a little bit of housekeeping and to let you know what to expect today in terms of technology, who's speaking, and what our agenda is, and then we will dive into the presentation. So first of all, thank you so much to Eric White, who is running the back end of this presentation today for you all. He'll be managing the chat for the majority of the presentation. And so if you all have any questions, please go ahead and type them into the chat box, and he'll make sure that those get to the presenters. We'll be responding to any questions you all may have after this webinar in a follow-up email so that you have our responses in writing. You'll also, in addition to receiving answers to any questions that you all post in the chat, we'll be sharing the recording from this presentation in that follow-up email, as well as some additional resources that you'll hear about later in the presentation. I'm going to introduce all of our speakers now, and then once I'm done with introductions, I will go through the agenda with you all, and then we'll dive into the presentation. All right, so joining us today are Ashley Harrington, Trey Roberts, and Demarcus Andrews. Ashley Harrington is the Federal Advocacy Director and a Senior Counsel at the Center for Responsible Lending. Ashley's portfolio includes general consumer lending issues with a particular focus on student debt and small business. Ashley recently returned to CRL from a brief project at the United Negro College Fund. At UNCF, Ashley served as the Director of the National Social Justice Program and was a member of the Public Policy and Government Affairs team. Before UNCF, Ashley served as CRL's Special Assistant to the President and Policy Counsel. She assumed a lead role in federal advocacy efforts and was a primary negotiator for the Department of Education's 2017 to 2018 Borrower Defense to Repayment Rulemaking Committee. Ashley previously worked in the office of Governor Andrew Cuomo as Special Assistant to the Chief Diversity Officer. This is my favorite part. Originally from Greensboro, North Carolina, Ashley received her BA in Public Policy Analysis from UNC Chapel Hill, where she was a Morehead-Cain Scholar and a Gates Millennium Scholar. After UNC, Ashley earned her JD from New York University School of Law, and Ashley's admitted to practice law in the state of New York. Thank you so much for joining us today, Ashley. We're really excited to hear from you. We are also joined today by Trey Roberts. Trey Roberts is the Community Engagement Manager at Dix Park Conservancy. He is a co-founder of Raleigh Pride and worked as a community organizer for the Warren for President campaign. He's also a member of the Raleigh Municipal Government's Human Relations Commission. Trey received a BA in Mass Communications and Media Studies from William Peace University in Raleigh, graduating in 2018. He received his Associates of Arts degree from Nash Community College in 2016, and he's a proud member of the Halua Saponi tribe. Thank you so much for joining us today, Trey. Finally, we'll be joined today by Demarcus Andrews. Demarcus is the North Carolina Policy and Outreach Associate for the Center for Responsible Lending. In this role, he focuses on predatory debt practices and student loan debt. Demarcus serves as the facilitator of the North Carolina Coalition for Responsible Lending. Prior to joining CRL, Demarcus served as the policy advocate at Toxic Free NC, a nonprofit organization that seeks to advance environmental health and justice in North Carolina. While at Toxic Free, he built and ran coalitions and engaged members of the General Assembly. Throughout his professional career, Demarcus has cultivated his skills in organizing, in social media campaigns, and in relationship building. Demarcus graduated with a BA in Political Science from Gardner-Webb University. He also received a master's degree in public policy from the Stanford School of Public Policy at Duke University. Thanks so much for joining us today, Demarcus. All right. Now that you all have a sense of who our speakers are this morning, let me walk you all through the agenda. So this morning you'll begin with me. Again, my name is Rochelle Sparko, and I'm the Director of North Carolina Policy at the Center for Responsible Lending. I'm going to walk y'all through some basic information about student loan debt nationally and in North Carolina, and then walk y'all through some of the results of the poll that we conducted earlier this year of student loan borrowers in North Carolina. After that, Ashley Harrington is going to speak with us to deepen our understanding of student loan servicing and student loan debt as a racial justice issue. Following Ashley's presentation, we'll hear from Trey about his experiences as a student loan borrower and how that's affected his life and his family's life. Finally, we'll wrap up with Demarcus. Demarcus will speak to us about ways in which folks on this call and elsewhere can get involved in our campaign to reform student loan debt servicing in North Carolina. And so with that, you all are stuck with me for a little while for the really exciting PowerPoint section of this presentation. I'm going to try and efficiently share my screen right now, but I'm not a technological whiz, so bear with me as I try to figure it out. All right, perhaps it is working. I'm making that face. All right, let me see. Can folks see my screen? I'm gonna get us out of here. You would never know how many times I practiced this to make sure it went smoothly. And of course, it does not. Okay, there we go. And let's try that. My computer is slow. I'll tell you when I think it's supposed to be loaded up, and then maybe somebody can like wave at me to tell me if it's working or not. There we go. All right, I'm going to pretend you all can see my screen. So if you can't, maybe Eric, you can come off mute and tell me because I can't see anyone anymore. Thanks for bearing with me through my technological difficulties. Hopefully they are now at an end. All right, so today we're going to discuss at first some parameters of the student loan crisis in North Carolina and nationwide to give us a perspective on how North Carolina fits into the bigger picture nationally. All right, so first I'm going to share a little bit of national data, facts about the national student loan crisis. So right now there is $1.7 trillion in outstanding student loan debt across the country. And this is 2.3 times as much student loan debt as folks owed in 2018. There are 44 million borrowers, which is roughly 1 out of every 5 households in the United States holding student loan debt. 50% of student loan debt is held by people under 35 years old, and the average balance of student loan debt held by individuals is $37,000. Student loan debt represents 11% of all household debt, which is up from 3% in just 2001. Another interesting and somewhat troubling fact is that student loan debt exceeds nearly all forms of consumer debt, excluding only mortgages. With the increase in student loan debt nationally, it's not terribly surprising that we see signs of distress among borrowers. 40% of recent borrowers are projected to eventually default within 20 years of their first enrollment in school. For those who haven't defaulted in the first 5 years of repayment, less than half of borrowers have paid down any principal. So they're just paying interest in those first 5 years of repayment. And delinquency and default are exacerbated by a largely unregulated student loan servicing industry. Student loan debt does not affect all communities and all borrowers equally. Not surprisingly, the burden of student loan debt falls disproportionately on Black households, 1.4 times as many young Black households have student loan debt as young white households. About half of all Black borrowers with a bachelor's degree owe more than they borrowed 4 years after graduation, compared to 23% of Latinos and 17% of whites. 2.5 times as many Black borrowers default as white borrowers 12 years after enrollment. The comparable statistic for Latinos is that they default at 1.7 times the rate of white borrowers. Student loan debt also falls disproportionately on other groups of folks. 2/3 of outstanding loan debt is owed by women. And borrowers over 60 years old experienced the sharpest increase in student loan debt in a 10-year period between 2008 and 2018. And 30% more rural borrowers are severely delinquent on their student loans than peers who relocate to metropolitan areas. So it's a little bit of a grim picture nationally. What's happening in North Carolina? Student loan debt in North Carolina, we have 1.2 million North Carolinians with outstanding student loan debt of $44 billion. Since 2008, there's been an almost 300% increase in the amount of student loan debt owed by North Carolinians. And since 2005, the number of North Carolinians with student loan debt has nearly doubled. 15.4% of North Carolina adults owe student loan debt. All right, so that gives you some sense of the breadth of the issue in North Carolina and nationally. And now we're going to have a really fun time where I switch to a different PowerPoint presentation to share with you all the polling results. The reason I have to do this and do it apparently very slowly is that Morning Consult, which conducted this poll, created the slide deck in part for us, a draft of the deck, and they did it in something called widescreen, and so I couldn't merge the two together. Technology is my favorite. While we wait for that to load, because my computer is the slowest in the entire world, I will tell you that Morning Consult conducted this poll online of 500 North Carolina student loan borrowers who are currently in repayment, and that the poll was conducted in late August and into early September. Of this year. Some of the key takeaways from the poll. North Carolina student loan borrowers report that they struggle to make their payments at an overwhelming scale. 51% struggle to pay their student loan debt. They've reduced the amount that they save for retirement, and they've put off major purchases like cars or homes because of their student loan debt. 73% of North Carolina student loan borrowers say that their student loans cause them stress, and well over half report that they would have trouble paying for an unexpected expense or that they're already behind in meeting their payments. Almost a quarter of North Carolina student loan borrowers are not aware that their student loan payments are currently paused. Further, about 41% have had problems with their loan servicer that have resulted in lower credit scores, and 1 in 3 borrowers report that their servicer did not tell them about income-driven repayment options. 45% of North Carolina student loan borrowers report a decrease in their household income since the onset of COVID-19, with the most severe impact hitting borrowers who earn less than $55,000 or $50,000 a year, with 55% of those households reporting a decrease in their monthly income. Nearly 4 out of 5 North Carolina student loan borrowers support requiring loan servicers to automatically adjust monthly student loan payments based on income. And 2/3 of North Carolina borrowers from across the political spectrum strongly support eliminating student loan interest on all federal loans, extending the monthly payment moratorium, and reducing student loan debt by $20,000 for all borrowers. So we'll see some of that in the data as we go through these slides to learn more about what the polling results showed. So first, let's take a look at what the impact of COVID-19 has been on student loan borrowers in North Carolina. As we mentioned in the top line, 45% of student loan borrowers report a decrease in their household income since the onset of COVID-19. So here's a colorful representation of that data. Digging a little deeper into that, we see here again that folks who earn under $50,000 are reporting the largest decrease in their monthly income, with 55% reporting that they've lost income during the COVID-19 pandemic. So how are borrowers managing, these student loan borrowers managing their expenses during COVID-19? 38% of them report that they're putting off paying a student loan. 37% report that they're taking money out of a savings account. And many, 31%, are carrying a balance on a credit card, going more deeply into debt to help them make ends meet during the coronavirus pandemic. And over a quarter are borrowing money from friends or family. So we're seeing some distress among the student loan borrower population of North Carolina. They're struggling to keep up. They were struggling before, and things are getting harder for them. So borrowers of color and those making below $50,000 are more likely than white borrowers, and more likely than those earning more than $50,000 to report that they'd have trouble with an unexpected expense, or again, that they're already falling behind in their finances. And we see that stark data in the line about people of color and those with income under $50,000. Three-quarters of borrowers report that their student loans cause them stress. You can see here in the red bars that we have about 73% of borrowers reporting experiencing stress because of their student loans. Where does that stress fall predominantly? It falls on female borrowers, borrowers that are younger, under age 35, people of color, and borrowers with income under $50,000 a year, with 77% and 78% reporting stress among those groups. Younger borrowers and borrowers of color are reporting that their student loan debt has the highest level of impact on their overall budget. So you can see huge amounts of people of color and younger borrowers making their budgets around their student loan debt more so than other groups. Servicers are not providing crucial information to borrowers, according to student loan borrowers themselves. So let's get a sense of how much money are student loan borrowers in North Carolina paying every month, both before the pandemic and now, remembering that there is a pause on federal student loan payments right now. 39% of borrowers report that they're not required to make payments on their student loan debt right now. But before COVID started, about half of borrowers report paying somewhere between $50 a month and $299 a month. This was a statistic that I found particularly troubling. About a quarter of North Carolina borrowers aren't aware that there is currently a pause in payments on federal student loans. Fully a quarter of folks are potentially making payments or experiencing stress about difficulty making payments at a time when they may not need to be paying at all. Again, the majority of borrowers across all key demographics are aware that student loans have been automatically deferred with 0% interest during the coronavirus pandemic. But we see the highest number reporting that they didn't know that among people of color and people earning less than $50,000 a year. And if you remember back to some of our earlier slides, those are two of the demographics of folks that are experiencing the most stress or the most difficulty making ends meet with their student loans and other debts or bills that they have. So particularly troubling that nearly 30% of both of those groups don't know that their student loan payments are deferred right now. 41% of borrowers report that they've had a problem related to their student loan that lowered their credit. A third, or 33%, report that they've had a problem that increased the overall cost of their loan. And 32% report that a servicer did not tell them about income-based repayment. So here we've asked borrowers about problems they've experienced with their servicers, and just in overwhelming numbers, we see high percentages of folks saying that they've had difficulty managing the repayment process with their loan servicer in some way or another. So what's the impact of all of this debt and the difficulty that folks are having in repaying it on North Carolina's economy? So among North Carolina borrowers, 52% report that they struggle to make their student loan payment every month. 41% say that they've reduced the amount that they're saving for retirement. So this is a problem that we're going to kind of keep seeing implications from further and further down the line. We also see folks delaying major purchases like cars or buying a home. About a fifth of borrowers report knowing someone who moved away to take a job to help them afford their student loan payments. Borrowers moving in order to pay their student loan debt may be contributing to North Carolina's loss of population in many of our rural counties. Just a couple of days ago, the Student Borrower Protection Center and the National Young Farmers Coalition released data showing that rural borrowers who stay in their communities are 30% more likely to default on their student loan debt than their peers who move away to metropolitan areas. So the pressure to leave because of student loan debt, leave rural areas because of student loan debt is real. And people are moving, among our population of folks that responded to the poll, they know folks who are moving because of student loan debt. So then we asked student loan borrowers, what do they want policymakers to do about student loan debt? And overwhelmingly, we saw a very positive response for a number of different policy solutions, some of which are detailed here. For instance, eliminating student loan interest on all federal loans, extending payment relief through next September. It's due to stop at the end of this year, although there are negotiations happening now to extend that period, so hopefully we'll see that happen for borrowers. And really strong support for reducing student loan debt by $20,000 for all borrowers. And we broke down the data by political party, so you can see that regardless of party and across the political spectrum, there's really quite strong support for all of these proposals. For eliminating student loan interest on federal debt, to reducing debt by $20,000 for all borrowers, and also some really strong support for adjusting student loan payments based on income automatically as opposed to through an application process. And also some good support for having an office in North Carolina to take student loan complaints and enforce state consumer protection laws. So we note that the strongest support is for actions that can only be taken at the federal level, but there is strong support among North Carolina student loan borrowers for actions that the state can take to help protect folks from shoddy loan servicing as well. So we're going to head back to our previous slide deck, which should only take us 20 minutes to switch over, so that I can tie all of this data in for you to our student loan campaign that we're launching today. So maybe this is going to go more smoothly. Yay! All right. So we've taken a look at the polling results. Now let's connect it all to this campaign that we're kicking off today. So in 2017, the Consumer Financial Protection Bureau and several states sued Navient, which is a large national loan servicer, for some of the actions that we've seen highlighted in the questions we asked borrowers in our poll, trouble that they've had with their loan servicers. And alleged that Navient failed to put qualified borrowers into income-based repayment plans, that they failed to discharge veterans from making payments, that they failed to apply payments correctly to borrowers' loans, and that they failed to remove eligible cosigners from borrowers' loans. And in so doing, it managed to add $4 billion to student loan debt balances. How did this happen? I share with you this quote from Navient's CEO. There's no expectation that the servicer will act in the interest of the consumer. This type of attitude trickled down through the company, apparently, and led to the massive increase in indebtedness for borrowers across the United States. Given that cavalier attitude toward student loan borrowers and what sort of duty of care is owed to them by loan servicers, this campaign that we're launching today, the Student Loan Debt Campaign, calls on the state of North Carolina to protect borrowers from shoddy student loan servicing. And we call on North Carolina to rein in abuses by student loan servicers like misleading borrowers or misrepresenting information to borrowers, misapplying their loan payments, refusing to communicate with authorized representatives like a borrower's attorney or credit counselor, providing inaccurate information to credit bureaus, which harms borrowers' ability to get jobs, find places to live, and take on other debt like a mortgage loan or car loan. And also for placing borrowers into forbearance or default without assessing their eligibility for income-driven repayment, which is a better financial option for borrowers. And with that, I will end our technologically amazing slide presentation. Thanks all for bearing with me, and I will now pass the mic over to Ashley Harrington, who will talk to us about why all of this data reflects a racial justice problem in North Carolina and across the country. Thanks all for bearing with me. Ashley?
Thanks. And I thought it was great. That was a great presentation. No technological dish. I have way more when I do it. So, which is why I don't have slides. And I'm just going to talk and hopefully give some valuable information. Really excited to be here. As Rochelle mentioned, I'm originally from North Carolina. So this is a problem in an area of the country that's near and dear to my heart. I spend a lot of time talking about student debt and its racial justice implications. And I spend a lot of time talking about it, particularly from the need for cancellation. But servicing reform is just as important. And I'm happy to have the opportunity to talk about how that plays out today. So just to put this all a little bit in context, I think Rochelle provided some great facts about what student debt looks like across this country and in North Carolina. I think it's really important to highlight that while there is a student debt crisis for a lot of people, 45 million people, $1.7 trillion, the burden is disproportionately falling on borrowers of color. And I hope that is one of the main takeaways you have today, is that when we're talking about solutions to the student debt crisis, we are talking about solutions that are disproportionately going to benefit borrowers of color, and particularly Black borrowers. Black borrowers are struggling the most with student debt. They're struggling the most with all the predatory practices, either from the for-profit institutions or the servicers. All of that is falling on Black borrowers hardest, and for many reasons. I think most people here know about the legacy, the continuing legacy of slavery, Jim Crow, redlining, inadequate access to GI Bill benefits, to credit in general, and how that still plays out today. And many of these policies are still going on, right? We haven't turned the corner on fair lending and unequal credit access. There has always been this dual system of access and opportunity in this country, and that extends to credit, and that is ongoing. We still have a lot of work to do, which is what CRL does in general, but it definitely plays out when we look at the impact and outcomes of student debt. And so it's very near and dear to me also because I have student debt, and I have a lot of friends and family who have student debt who talk to me about the problems. I have so many friends who should be doing well, but because of their student debt, they are struggling to achieve all the things that financial security looks like in this country. They can't buy homes, they can't start businesses, they can't save for retirement, and it's because they are burdened by student debt. And that's just not the system or the dream, right? That wasn't the dream of higher education. That wasn't the point of going to school. And so I think it's just really important to always keep these things in context, who is impacted and what that impact means, not just for the individuals, but for the communities and for our entire economy and society. Because when you think about it, the fact that a whole bunch of people, a whole generation, 45 million people have to struggle to buy homes and start businesses and save for retirement, that affects everybody. That doesn't just affect them. That doesn't just affect their immediate family. We all suffer when people can't contribute to the economy. And again, I think Rochelle laid out that the struggle was real before we got to COVID-19, right? We had 23% of people in default or serious delinquency before we had massive job loss, before we had an incredible public health crisis, before we didn't know what next month or next year looks like for this economy. And so it makes the solutions that we're talking about that much more important in the context of where we are right now in this world. And it's even more important to think about servicing reform, because what we've also learned over the past 4 years is that when we don't have a federal government who is taking servicing and student loan repayment seriously, we definitely need our states to step up and do that. And we've definitely seen a rollback in how the CFPB, how the Department of Education has been addressing the student debt crisis, how they've been overseeing servicers and for-profit colleges and institutions in general. And so that's why this legislation and the work that this coalition is doing is just really that much more important. And while we're about to have a change in administration, that doesn't mean things like this can't happen again. We need major reforms at the front and back end of our system. But until then, we also need our states to help protect consumers. And so really excited to talk about that. So I think, you know, from the beginning, you have the historical practices that are preventing people from building wealth. And again, not just historical, ongoing, right? There is still a lack of access. We still have a Black home ownership rate that is lower than it was when we had the Fair Housing Act in 1968. You have Black business owners who are more likely to rely on their own personal credit scores or fringe lenders when they're getting ready to start up or expand their businesses. You have Black and Latino borrowers disproportionately impacted by payday lending, overdraft practice, debt collection. So there is still all of these pieces that are ongoing. These practices haven't ended. And so you have the inability to build intergenerational wealth, which means that borrowers of color, Black borrowers in particular, have to borrow more, are more likely to borrow and struggle in repayment to go to school. And then that you have them being preyed upon by predatory for-profit institutions. And then to add insult to injury, you have an issue with how they are able to manage their repayment because servicers, there's actually evidence that servicers are even treating borrowers differently. So Rochelle just laid out how servicers have been known to think about borrowers and how they have no duty to them. And so causing billions of dollars to be added on the bills. And there's evidence that the lack of care and concern is even worse when those borrowers are of color, when they're a Black and Latino borrower, and that some of these outcomes are worse because of the poor servicing. And we need look no further than to understand how poor servicing can play out and harm communities than 2008. We saw what poor servicing can do. That was a major component of that foreclosure crisis that took $1 trillion in wealth from communities of color, wealth that has never been regained. And so to see the same thing play out in the student debt space should be very concerning to all of us because student debt is at crisis levels. Communities are in crisis because of it. And when servicers, the very people who are supposed to help you navigate your loan, help you manage repayment, keep you up to date, keep you out of default, keep you out of forbearance, help you limit your interest, help make sure your payments are going where they're supposed to go, help keep you on track so that you can get your public service loan forgiveness, so that you can get your income-based repayment forgiveness, and so that you can manage and maintain and do other things, so that you can be in the right plan, so that you can maybe try to qualify for a home, right? Looking at your DTI, so that you can try to get a business credit, right? All of those things, your first stop is your servicer. So if your servicer isn't helping you, if your servicer doesn't give you the right information, then you already have a problem. And all of these systems are connected. So when we're talking about student loans, we're talking about federal student loans, right? Because 90% of the 1.7 trillion is federal debt. And some of you may not know this, but Black borrowers are more likely, for instance, to rely on FHA, fair housing, FHA loans to get mortgage credit. But if you've ever defaulted on a federal loan, or if you've been delinquent, that can severely impact your ability to get a federal home loan. And so if Black borrowers are more likely to need a federal home loan because they've been shut out of the traditional credit market, then it's that much more important that their student loans are okay and that their student loans are in good standing. But they can't be if they're being pushed into forbearance, or they're having trouble contacting their servicers, or their servicers are giving them wrong information. So all of this compounds on each other to a situation that we have today where the student debt crisis is the product of the racial wealth gap and exacerbating it at the same time. And servicing is a huge part of that. And so it's definitely a racial justice issue. And I hope that we continue to put it in that context and that you were able to put it in that context and remind ourselves that all of this matters. It may seem like a small thing, right? I for one want cancellation, and we're working on it. And we think there can be executive action, and we're glad to see such strong support of it. But in the meantime, even if we get 20K cancellation or 50K cancellation, there are going to be so many folks who still have a lot of debt they have to manage. And they're going to have to manage it through their servicers. And so we need our servicers to be accountable to the borrowers. and to us, right? And to us as taxpayers. It is their job and they need to do it well. Thanks.
Excellent. Thank you so much, Ashley. And folks, I know that Eric's been putting in the chat box a reminder that you all can ask questions. Certainly, if you all have questions of Ashley about student loan servicing as a racial justice issue, please do type those in and we will follow up with you all. Ashley, thank you again so much for giving us that necessary context for the problems that borrowers of color and Black borrowers in particular face as they try to navigate repayment of student loan debt with their servicer. Everyone, we're now going to move into a discussion with Trey Roberts, who I introduced earlier. And Trey, are you unmuted?
Yes, I am.
You're on. Awesome. Well, thank you again for joining us this morning for this call, and thank you so much for being willing to share your story about student loan debt and making efforts to repay that student loan debt. Everyone, Trey and I are going to do this as like an interview style, so bear with us. I feel like I'm in like a courtroom drama. Trey, will you tell us a little bit about what motivated you to attend college?
Well, I will say, before I say what motivated me, when I graduated high school, I did take a couple years off before I actually went back to school. And one of the reasons why was because of the fear of debt. A lot of people in my hometown have that fear of debt. I grew up in a small rural community in North Carolina called Hollister. And some people most people there just stay at home and work a job at a factory or in town and not pursue it because it seems so impossible to face something like that. So what motivated me was that I really dreamt of something bigger than my small town. Not to offend anybody that lives there, because they're smart people. They have a lot of street smart, and they take care of one another. But I really wanted to go out and expand what I already do. That's what motivated me.
Awesome. Thanks, Trey. So I know in the introduction I talked a little bit about where you went to college. Can you tell us about why you made those choices? Why did you choose to go to Nash Community College and then to Peace University?
Well, Nash Community College, it seemed easier to process. Going to community college first, basically I thought about saving money, and also it's closer to home as a easier transition to the world of university. I will be honest, I think when I went in, before I even went into community college, I think I was kind of just intimidated by the idea of college, to be honest, of like, what, am I prepared? Am I smart enough for it? Am I good enough for it? Like, am I allowed in? Like I was afraid of the environment that was going to be created there.
And so what prompted you to choose Peace College after you finished your associate's degree?
I think it's the size of it. As I said, I grew up in a small town, very communal, then went to community college, had that same communal feeling, and I think I just wanted to transition to something where the teachers knew my name more and I could create a closer relationship with the teachers to help guide me whenever I needed help. And honestly, I'm thankful I did that, because it really was the right choice to do for where I was coming from. I had to think about what I needed. I wasn't looking for competition, or I was looking for teamwork.
Awesome. And Trey, how did you and your family approach paying for college?
So I've talked about this before, and so I always say we don't think about the money part, even though you do think about it, because that's what holds you back. But up to the point of when you graduate, that's when you hit with the reality, like, we didn't have any savings for you to go to college in the beginning. And then you have family members who, my father didn't go to college. My mother only went to community college and did a FAFSA like 18 years ago, 20 years ago. is different. She doesn't know how to work the FAFSA website either. Neither do I. And that's when it hits you that, oh, you're gonna have to figure this out on your own through Googling or through talking to busy financial aid officers. So it wasn't until that moment that I graduated, leading into my senior year in high school, was like overwhelmed by this idea of FAFSA and paying and student loans that I was just like, I think I'll be fine as a worker. And then when I went into it, actually going into community college, I had to just navigate this maze and understand what a federal loan was. What did subsidized and unsubsidized mean? And what did this mean for my future? I do remember getting into one school my year, and this is what deterred me from it, was that I kind of did the math. I was like, oh, so I have to pay all of this back? And I did the math, and I was like, $100 grand? I was like, I can't do that.
Yeah. So it's interesting to me to hear that you sort of approached repayment mostly, or thinking about repayment mostly, as you were finishing up school. Can you talk to me a little bit about what happened after graduation? Did you immediately need to repay student loan debt? Did you have a period of time where you didn't? Did you end up, you talk about navigating the FAFSA and subsidized and unsubsidized loans. Is that how you were able to pay for college? Or was it more complicated than that?
So I started paying for my student loan 6 months after graduation. I was serving at a restaurant, and I was kind of like forgot that it was there for 6 months, and then you get that nailnet email and you're like, oh, you expected me to pay all of this. And on top of that, I had a private student loan that my aunt co-signed for to help cover room and board. Honestly, that's all that covered. And that I had to start paying like right away after graduating. So I was already paying on that, and then this unsuspected surprise that I forgot about of my federal student loans that I had to pay back came 6 months later, and that was phone calls and like filling out applications and faxing those over. And in the beginning, I missed a lot of payments because I was just like, I can't do it at all. I don't know what they expect from me, but I don't have this amount at all. I had not gotten into my career yet in my designated study, and I was living with 3 other roommates, and it was just a navigation that honestly one of my roommates helped me with. She was dealing with she's dealt with it before in the past, and she had to guide me through that whole process of trying to get income based and applying for the nonprofit like service thing, and when I eventually got a nonprofit job.
So Trey, in that story, it sounds like you entered repayment on your private student loan immediately after graduation. You had some time between graduation, 6 months between graduation and repayment on your federal loans, and that you were trying to navigate an income-based repayment process. For folks who are on the webinar with us today who are a little older like myself, income-based repayment wasn't really an option for us. When you talk about needing to fill out paperwork, can you tell us a little bit more about that? What do you do to get income-based repayment?
So they base it off of what you believe you're going to make that year, and you tell them the amount, and they also take into account any other federal student loans you have with any other groups. Like I have NailNet, for example, if I had it for other, but they don't take it into when they do income-based repayment. They say, oh, this is how much you make this year, so this is how much we believe you can pay on this student loan. And sometimes that amount just simply pays interest. But one other thing they do is that they don't take into account of the private student loan I had as well. So they were like, yeah, we know you also paying $133 to your private student loan lender, but we can't really take that into account, and we just expect you to pay this extra on top, even though you make this much. So it's a process that's that is flawed, because eventually, once I did get into income-based repayment, I was just paying not full interest that was owed. So every month I was paying off a little bit of the interest and then getting more on top of it. So it was just like a limbo that I sat in.
Yeah, so we talked about that, I guess, earlier today when we said that there were a lot of folks entering repayment who owed more after starting repayments, and they did that they owed more after a few years of repayments than they did when they graduated from school. How did you find out about income-based repayment? You said a roommate helped you apply for it, but did your servicer disclose that you were eligible for it? Did they encourage you to apply?
They didn't encourage me to apply. She told me I should apply. My roommate had told me I should apply. I called them and I said, do you do this? And they were like, yes, we do. And this is after I missed a couple payments. And the first thing they offered me was deferment when I missed a couple payments. And I went into deferment, and then I called them about income-based repayment.
Awesome. Thanks, Trey. So for folks who are listening, this happens to a lot of borrowers, and deferment actually is not as good of a financial option for most student loan borrowers who are having trouble meeting their payments as compared to income-based repayment. But as you saw from the slide I shared with you about Navient, that's a pretty typical attitude. The servicer does make more money when they place borrowers into deferment than they do when putting them into income-based repayment. And as Trey described, income-based repayment takes time and energy, and you have to fill out some paperwork. Putting students into or student loan borrowers into deferment is pretty quick and easy for the servicer, so it costs them less to put borrowers there, which is why we see that happen pretty regularly. And don't see servicers offering borrowers like Trey who have a period of time after graduation where they're not able to pay the full amount of their monthly payment. And yeah, sorry that happened to you, Trey, and I'm glad your roommate was there to help you out, and that you were a bold enough advocate for yourself to call them again and make them do what was best for you. Trey, before we wrap up, I wanted to ask you, what sorts of decisions do you make because of your student loan debt, or what choices have you made as you navigate sort of your financial present and your financial future?
Early on after graduation, I remember when I was looking for health insurance, and I was looking at what my premium would cost and compared to what I had to pay regarding my student loans, private student loans and federal student loans. And then on top of that, rent. I had to make the choice to either defer or not pay my student loans, or have health care, or have a house. So I chose have a house and to pay my student loans. So for, I think, 2 years of my career, thankfully I work now that provides me health insurance. 2 years after graduating, I went without seeing the doctor, going to the eye doctor. After I did go to the doctor, they were like, yeah, your prescription, your eye doctor, your prescription is like no longer working for you. It's just, you make those choices, and that's not a place that we should be at, where we have to make the choice between having health care and paying our student loans. And to this day, I still budget my life around student loans first.
Trey, I want to thank you so much for joining us this morning again and for sharing your story. I know that it's not always easy to talk about debt in our culture and society, but you represent an enormous number of people in North Carolina who are facing similar struggles with student loan debt. I really appreciate you being willing to be the face of that conversation with us here this morning. So thank you again for joining us.
I want to thank y'all for having me, and I want to thank everyone in attendance for listening to my story. There's so many more who are probably going through worse that I know of, and thank y'all again.
Thank you, Trey. And with that, I'm going to pass the mic over to Demarcus Andrews. He's going to talk with you all about how to join the North Carolina Coalition for Responsible Lending's campaign to reform student loan debt in North Carolina. Demarcus, thanks again for joining us this morning.
Thank you,
The mic is yours.
Thank you. And thank you all for choosing to be with us this morning. There's a million things going on in life right now, and so we appreciate your presence today. And I'll have my slides being presented by Eric in the background, so I ask that you all bear with me. So as I'm sure you all have heard throughout the presentations today, student loan debt has and continues to have a devastating effect on the daily lives of many North Carolinians and our economy. And shoddy servicing, as Rochelle described earlier, plays a huge role in driving that high debt in North Carolina. And this financial burden is especially felt by our communities of color, which are disproportionately impacted by student loan debt. And hearing Trey's personal story, I think gives us insight into the plight and the impact of student loan debt that it has on many borrowers within our state. So if you're anything like me, after hearing all of that, I'm like, what can I do? And in my space, because I work on these issues, I'm thinking to myself, can I do more? And so I start with this first slide as, one way to get involved is to sign on to our public statement of support for a bill that would protect borrowers from loan servicing companies that participate in deceptive practices. And these links, as I move along through the slides, will be posted in the chat. So feel free to go ahead and sign on to that public statement. Eric, do you mind pulling up the second slide for me? So yes, so a second way to get involved is to help us gather stories from borrowers. So stories like Trey. I think it's so important that we uplift these stories so that we know what these direct impacts, looks like for borrowers within our state. I think that's really important to drive the policy changes that, we are intending to, advocate for here in the state. Eric, you'll go to the next slide for me. And as you all know, it takes collective power in order to drive and move policy forward. So I ask that you all please consider joining our North Carolina Coalition for Responsible Lending and helping ensure a fair marketplace for marginalized and underserved communities. And throughout the coalition, we support policy that reins in abusive financial practices and promotes family wealth in a number of consumer finance issues. Eric, can you move us to the next slide? So yes, these are our social media handles. So please, follow us. We do follow back and just help us amplify economic justice issues in our state. It's vitally important that we keep this conversation going, especially in this age of social media. You'll go to the next slide for me. So I think I forgot one slide. So there's another slide that I think I forgot to include, but I'm asking you all to please consider writing a letter to the editor or an op-ed about the impacts of student loan debt. Please feel free to get in touch with us so that we can keep track of them, but also walk you through some of our polling data. And so, as I mentioned earlier, all of the direct links have been dropped into the chat, and all of the resources that I presented here today will be housed on our coalition website. So again, thank you all for choosing to be with us today. And I'll now pass it to my colleague, Rochelle, to conclude our webinar.
Thank you so much, Demarcus. Yeah, I posted all of those links in the chat. They're not clickable there, but you should be able to cut and paste them. And again, as Demarcus said, they will be in the follow-up email in a clickable form if that feels too annoying to you. With that, I want to say thank you again to all of our speakers this morning, Ashley, Trey, and Demarcus. I want to thank Eric again for running things so smoothly on the back end. And I'd like to thank the entire North Carolina team at the Center for Responsible Lending. Though you didn't see all of their faces today, they have been instrumental in helping us to understand the breadth and depth of the student loan crisis in North Carolina, in helping us to do the outreach to media, to develop our website, to get ourselves up on social media so that we have ways to communicate with you all about the student debt crisis in North Carolina and give you ways to engage. So thank you all so much for your help and support in putting on this webinar today. And thank you everyone for joining us. I hope that you will feel inspired by the data, if that's a thing, or mostly by Trey's incredible story, to join the coalition, to share that story collection form with your colleagues, with your networks, with people you know in your private life. This is a story that touches so many people, the student loan crisis. So we just really would love to collect some more stories from folks so that we can share those with policymakers to encourage them to join us in reforming student loan debt servicing in North Carolina. And I do hope that you'll follow us on social media so that you can hear about additional opportunities to learn more or do more to help student loan borrowers across the state. Thank you all again so much for coming. Please be in touch if you have any questions about the campaign, either with myself or with Demarcus, and we will send our contact information out to you in that follow-up email, and our email addresses are also available on the Center for Responsible Lending's website. And I put Demarcus front and center in the chat so you can email him. My email follows the same protocol as rochelle.sparko@responsiblelending.org. Again, thank you all so much for joining. I hope you have a good weekend and that you will take strong and bold action to combat the student debt crisis in North Carolina starting as soon as this webinar ends. Have a great day, y'all. Thank you all, and goodbye.